Welcome, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect that you will take these opinions and form your own financial conclusions. Today is Wednesday, September 8th, 2021, and this is Blockhead Traders Weekly. On this week's episode, we're joined by fellow Blockhead trader Viper XL007, and actually this episode is being streamed live to our Discord channel. You can find a link in the description below. You can hop in there during future episodes as we plan to stream it live every week. You can chat there live to us, and maybe someday we'll open it up for user questions and things like that. However, in this week's episode, we are going to take a look back at what is happening in Viper and Maya's portfolio. In this week, I am quite distracted and disappointed as I booked a large loss on a natural gas futures trade that had just went south. So we're going to take a first stab look at that in this episode, more complete review to follow. And we're going to see what Viper is up to in his portfolio and what he's been trading this week. So first off, Viper, what's been happening with you? I'm not really in a good mental state right now to judge trades and kind of talk about things that I might want to do right now.
Yeah, the struggle is real. As longtime viewers may recall, I'm coming out of my own big loss there with SESN Bio. So I feel your pain, and we'll get into whatever you are willing to dive into in your mental state in a minute. So I'm trying to be on the rebound, but I'm also kind of taking this chance to really start to drill into some strategies. So, like we've talked about previously on previous episodes, I'm settling into a screening tactic. So that's going well. As we saw on the last episode, sometimes you go fishing and there's no fish. But I did catch a fish recently within the last few days, something that caught my eye through my screening method. And then I decided to do a couple different things with it. The first thing I did with it was typical. The setup was good for some naked put selling. So I went ahead, sold a handful of naked puts on it because I liked where it was at. And then the next thing that I did was there seemed to be, the news that was pumping this thing up was interesting news. We'll get into that in a minute, but it also was causing this thing leading up to the first ever reported earnings publicly by this company were this afternoon at the close, September 8th. And basically, what was the lead up to that was it was causing a lot of volatility. So obviously, like we've talked about before, volatility is what's going to bring that premium up. And then because I'm still in a pretty minimal buying power, not buying power, but positions. I don't have a lot of positions out right now. I decided to take this opportunity to really drill into some day trading to practice swing patterns, because one thing about swing patterns and price action that we always talk about is this stuff persists on any time frame, whether you're zoomed into a very short time frame, the 1 minute candles, or you're zoomed out to the monthlies or the yearlies. Swing patterns will always present themselves on the different time frames. So decided to take the opportunity to just play around with some small positions and, just try to predict, like we talked about before, when you're trying to test out a new strategy, get in manageable, get in small, get in, bite size, and just start toying around with it. So that's where we ended up. So let me jump over here to the chart. So the underlying is Rocket Lab, RKLB. So first off, we can see what piqued my interest. For anyone who recalls my screening criteria, basically I went out screening for it September 3rd And the reason it perked up on my screener, on my radar was this long tail of it's not perfectly horizontal, but this, long tail where we set a high. We hadn't broken that high for quite a while. This is back in July, beginning of July. And we were kind of in this downtrend, and we kind of come back up a little bit. And so this is exactly what I'm looking for, is I'm looking for a close that clears some of these distant highs. So we actually cleared all the way back to March on the 3rd, on September 3rd. We cleared all the way back up to here. And then as I've mentioned before, looking down here, which my face is hiding, let me slide that over. Looking down here, we also see this influx. This is volume across the bottom. We see this influx of volume that peaks up as well. So that peaks, that's what, surfaces this on my radar. I did a quick check as to what was the news, what was driving this push. And the push was that today, September 8th, the company was going to have their first ever public earnings. And that sounds pretty good to me as far as the kinds of things I'm looking for to keep things volatile. So we can see the next day, and actually this red candle, this was yesterday. I tried doing some day trading, and it ended up not going well for me. We can see if we drill down here to the minute charts and make this a little more readable. And then let's back up here to yesterday's action. Just to set the stage. So yesterday's action is going to be this middle slice here. Let me zoom in a little bit. So this is what I first tried to do some day trade. And again, what I'm looking at is now I'm looking at a very small time frame, minute candles, and there's, some swing patterns here. And so I'm trying to just test out, okay, where do I think an important level is? Identify that. Now let's see it get tested. Let's see it confirmed as support or resistance, buy, sell, whatever, to get going. So I was doing that, and I was actually trending up pretty positive. When I first jumped in, I was not as disciplined or as technical as I should have been. So I actually started off with a pretty decent loss because I just wasn't timing the swings correctly. I was out of sync with the swings. And then when I started to realize what I was doing, I actually started turning it around. So on this run right here that we see was actually when I came out of the hole that I dug for myself. I actually became positive on the position that I was holding for the day trade. And then right here at the end of the day, it fell off, and I actually ended up booking a loss because I did not pay attention to that end. So, seems like it makes sense. If you're day trading, pay attention to what's going on. So today, we opened up, and we're still in these pretty big swings. Pretty big for a $15 stock, meaning pretty easy to reduce. Not take huge positions, but still get some decent exposure. Swinging from 1570 down to 1480. So, dollar swings, which is pretty solid. So I get in, and here's kind of what I end up doing. First thing was we get right out of the gate, we get the high swing of the day. So now in the context of price action and price levels, this is the swing. And to, entering in once it starts dropping out is risky unless it's still risky, but your best probability is to wait for a retrace to test that start of the swing. So that's what we see here. We swing up high, and it actually works its way down, making lower highs and then lower lows until we actually get right down here to the bottom, and it tests that original swing, and it proves to be support. So once this starts showing signs of support, that's when I said, okay, this is now confirmation of support. So now let's buy some positions and get in. And then looking at previous swings, as it was rising up, anything that was support has risk of becoming resistance. Anything that was resistance has opportunity to become support. So looking at the previous swing, we can kind of see, right around here in this range, what was support was the first target that I had, where I bought, say, 1 or 200 shares or whatever, and I start chipping it away, selling it back as we approach these different levels of previous support or resistance, just to make sure I lock something in if it should prove to flip, and then go back down or whatever. So we rise up, and then this just kind of goes on throughout the day. And I actually charted. So basically, looking at the day, this solid red line at the bottom is yesterday's close. So we definitely want to stay above that. As long as we're above that, we can claim on the dailies that we're still in the bull pattern. So I wanted to get that in there just to know that's my frame of reference. Any of these dotted yellow lines, that's where I saw a level appear, but I didn't want to act on it, because today's exercise was all about staying strict to some fundamentals, trying to improve those fundamentals. So I kind of identified where the levels were, but I didn't buy in yet, because that was the key fundamental emotional bias that I wanted to get away from, was wait for the confirmation, then act. And that's something I struggle with a lot, especially when we're looking at a bigger position, looking at daily charts and things like that. So these yellow dotted lines then get confirmed later on down the line. This level here appeared as support, and then as we're on our way back down, it is confirmed support along here. Yellow is where I started tracking it. Green is where I was like, I should move on this. And then typically I waited another candle or two before I actually jumped to get into it. So the big one was this top one. So this is the first one throughout the day that actually was a resistance support flip. So this was a resistance level here. We came back down, we came back up, we tested it a little bit, and then we broke it. And then here we actually get the flip, where what was a resistance level has now become support, and then it stayed support through most of the rest of the day, until we eventually lost it right here towards closing. So by closing, I had learned my lesson. I was like, I don't know what it is, but this thing just whimpers off at the end of the day. So somewhere around here, 2:30, 3 o'clock, I was done. I was up on the day, felt pretty good. Let's walk away. Even though I knew earnings were coming after the bell, man, was that tempting to just, grab a bag full and just hold it and wait and see. But that was not the play. The play was to practice day trading, practice my swing patterns. And I had to keep in mind, I got some naked puts sitting on the bottom side of this. So the last thing I want to happen is to be holding a bag of shares. Earnings are a total coin flip, and for that thing to go south, and now I have those naked puts to worry about, and I'm holding a bunch of shares. That's just double whammy that I was not looking for. So the last thing that I also then tried to tune as the day went on, as I was feeling pretty confident in my chart reading of this, I wanted to explore the Heikin Ashi candles. And these are candles which I think are very helpful, very useful, but like any of these tools, you need to be careful in how you use them and how you rely on them, in the fact that nothing is more reliable than just good chart reading, good price level identification, all that kind of stuff. I feel like, Heikin Ashi candles were something that I came into months and months ago, and just the concept of them, I was like, yeah, this is what I need to trade good. And that's not the case. No tool is going to help you do that. Otherwise everyone would do it. But they can still be useful. So for those who don't know, the Heikin Ashi candle is basically intended to be a trend indicator candle. Like, let's say this little run here on the regular candles, you'll actually see some red candles pop up in here. But the intent of the Heikin Ashi candle is to be a trend indicator. And so what we get is the wicks, and this is a lot to process mentally, because usually a long wick on a normal candle is a little concerning because it means, price went up and then you shot back down and it just never stabilized up there. In the Heikin Ashi candles, the wick is actually an indicator of how strong the trend is. So a longer wick as well as body. So the body of the candle is still measuring actual price, that the underlying moves. And then the wick is kind of indicating how strong is that move. And so that's why you kind of see this longer wick right in the middle of the trend. So that is a solid bull trend here. And then it kind of dies off. And then this flat one was just kind of a pancake where we kind of went sideways. Same up here, even though this is a longer body, the price stayed in here, but they're just, there was some on the minute normal candles, there were some green candles, some bear candles, and just no solid trend. My understanding is part of how this is calculated is volume is taken into account as to indicate whether it's a strong pattern or not. But the what I was using it for today was this is just a cleaner read, because this, when we go back to the regular candle, this is kind of a mess looking at the regular candle. Some of that is the volume was pretty low right around, lunchtime. So I hate these blip candles. I usually try to never trade something that has these annoying blip. The volume is so low, you don't get any sense of anything because it just kind of blips around. But I was in it because this one was moving so much and I was, testing it out. So the Heikin Ashi makes this a lot more readable, especially in those low volume times. And the way I used it was I had my levels identified. So I knew, as we were coming up to test this previous support, looking for a flip, I already had the level identified. This is what I'm watching. So now let me flip to a tool that kind of helps me identify when the trend is shifting. When is this pattern actually changing? And so that is when these candles really became helpful because they guided my buy-in point, my entry point, because, as this is coming down, I already had this level identified, like I said, and, this candle, as it's coming down, technically I hit the level. So would I buy here? But according to the Heikin Ashi, in the context I was using it, no, I don't want to buy there because we're still in a downtrend pattern. And so I actually waited, until I don't remember exactly, but probably the second candle early on before I actually bought in because we actually had the trend confirmation reversal. Potentially, I could see that usage of the Heikin Ashi, maybe to some stalwart, diehard, chart readers, maybe not necessary. Maybe they can deem those same sorts of things just by looking at the chart. However, in this implementation, I found it very useful. And the giant disclaimer, like I said, is it's not useful by itself. You need to build that baseline understanding before putting that tool on top of it to help you out. Because I could have done everything I did today just on the fundamentals of chart reading. This just made it a little bit easier to be that icing on the cake, so to speak. So that's kind of what I was up to today. How about you?
Yeah. So before we hop into my fun natural gas story, you mentioned that your base play was actually the naked puts. This one actually looks quite nice for premium selling. I just kind of pulled it up in the chart here. What was your strike on your puts again?
Yes, $12, I believe. I don't have the book in front of me, but I believe I sold the 12. Is it 12 or 1250?
1250 must be the one. Did you go with October expiration or were you September? Do you remember?
No, I went October. September was getting a little thin at the time I sold it.
Okay.
And I did them for $1.30 a piece, I believe. What was the close price today?
It closed at a little over $15. The underlying. It looks like you can pick up today for about $1.35. The October 1250 puts, at least at the ask.
Yeah. So I got them for $1.30 on the October. And the one thing I forgot to mention is earnings came out. It would have been a good hit if I was still holding those shares. It was positive, and I actually don't know that the earnings numbers were positive, but in part of the earnings call, Rocket Lab announced that they have contracts in place to do a ton of rocket launches for Internet of Things satellites and stuff like that. So this is already a booming sector, space, space, rockets, travel, all that kind of stuff. And so when you can come out and say, we got these contracts in place, at that point, it doesn't, that's what everybody's buying on. So the price actually jumped after hours about $1. And then it kind of leveled off up there. So I don't regret it. Like I said, I knew that was a possibility. I knew jumping $10 was a possibility, but I didn't want to be stuck with that bag when I already have these puts on. So that is what it is. And I'm actually looking for a potentially volatile day tomorrow. Now that all that news is out, I got to believe it's not going to stabilize, but it should still maintain a bull pattern.
Yeah, actually, let me just pull. Oops, wrong thing. Let me pull the chart here, because I want to show you an observation that I made here that I don't really 100% know how to kind of trade some of this. So I'm guessing the 1250 is a pretty nice strike because you kind of have this level here where you kind of have resistance twice there, and you're past that. So presumably that'll be support on the way down. So just touching on the 1250 strike and why that's kind of nice, even though, it seems far away, at least there's a level of potential support in between there. But the thing that's catching my eye, and I don't, maybe you can give some insight, but one thing that I've noticed is this is the volatility chart. And you can see volatility is just going through the roof. But one thing I've started to realize is when you're at all-time highs and kind of pushing up, this volatility won't really contract very fast, at least not that I've seen in other charts that I've kind of followed. And it's almost like while you're up here, this volatility stays really elevated. And one of the things, let me just flip over to the main brokerage area here. This is a thing that I was talking with you about a little bit before in the Thinkorswim, where you can really look at the premium distribution of the options. And I almost think that this could potentially be a covered call type of play. And the reason I'm saying that is I'm debating on when is a right time to open a covered call, but you can see that the call premiums are significantly more expensive than the put side, although this is pretty thick put premium too. They're both fat on both sides here. But as I look at the chart here, with the earnings finally out and basically not a lot of volume after hours and turbulence on it, yeah, it might be a little bit of a volatile day, but long term, you're probably not coming back that far. And if you go higher, great. So almost a covered call buying in at the, 1575 where we are now, and then selling something that's like a 17 or 19 strike as a covered call seems kind of lucrative. I don't know if you have much opinions on covered calls and when to enter them and stuff, but I'm trying personally to try to figure out when is the right time to start a covered call.
Yeah. No, that I agree. I mean, it's not like we've talked about, covered calls are not. I mean, those are things that we're learning how to do and whatnot. But I think that analysis makes sense. That the whole purpose in entering a covered call is to get the premium at a price that you're comfortable selling, because then you also almost synthetically raise the price that you sold it at. Because if you take $2.50 on your covered call at, let's just say, $20, then I mean that's synthetically you sold at $22.50. And so Yeah, I think this is a good use of that product depth chart, so you can see that the premium stays out there. So is it really worth holding those shares and waiting for 2250, or holding those shares? Let's get to 20. I'm just going to sell it there. I'm going to sell the covered call, and then I don't care if we actually get to 2250, because I've already synthetically made 2250 my sell point. So I think that makes sense to try that. And like you said, so the one thing I'll say that attracted me to the put was um, that $12 level, where there were two resistance levels in the past. A key point is those haven't been tested, so they are potential stops at a big drop. But until they're actually tested and confirmed, it's really a coin toss as to whether they're going to hold or not. So one of the things that attracted me to the puts was that 1250 at $1.30 that I got them brings me down to like 1120 as my break even. And the gap from that those $12 spikes to the bottom of the swing, I think was around 1050 or something like that. So it's still a little lower than my break even, but the gap was not significant. If this isn't like, if it hits the floor to the bottom of the gap, it's not like it's another $10 drop or anything like that. So that gap was what really appealed to me on the 1250 strike. Was worst case scenario, this thing goes, and I get assigned, my break even there is around 1120. And even if it hits that bottom 1050, 1020, whatever it is, this is still a good example of something that I think I believe in long term, just given the sector and the history of the chart. So those were kind of the thoughts that went through my head on that. But I think the covered call thing is a very interesting opportunity as well. Like you said, now that we see earnings are out, the news is out, all that's left now is for the market to react, and anything's possible, but it's hard to imagine a significant retrace yet. I mean, everything's going to retrace eventually, but the big question is, will it retrace all the way down, or is it going to establish a new swing? And the swing that I'm waiting for now is basically a swing to set that new all-time high, because now that becomes the swing to come back and test. And we no longer worry about the previous swing at this point, although the levels to hold and whatnot.
Yeah, actually, I guess that would be the big difference between those two plays. The short put and then the covered call would be, are you more bullish or bearish overall on it, or where do you want your protection? Because the covered call, your break even is going to be probably maybe $2 or $3 below where you buy in at, if you consider the premium you're going to collect from the call. So that's going to be quite a bit above the break even that you have on the put selling. Interesting. Yeah, so let's talk a little bit about natural gas, and I call it kind of my soy 2.0. So if you might recall, I had quite a bit of a lost trade not that long ago, a couple months ago in soy. Well, natural gas futures, the volatility was quite well on it, and I'd done well playing natural gas futures and options before, so I thought, hey, let's go ahead and hop in natural gas futures. Well, didn't turn out so well for me this time. So I'm going to have a deeper dive into why this was so painful. I think I started, looking through this evening as far as what was terribly wrong in this setup. I'm not quite ready to go through that because I'm still kind of figuring out how some of my rules and my trading need slightly modified for this play. But it's fresh on my mind. So let's chat a little bit about the loss here on natural gas. So I put together this chart just to kind of recap some of the stuff here. Viper was kind of in tune to me on this trade because, well, he probably didn't really knew that I entered it. It was going so well, but it started challenging on the call side, and I started kind of messaging him saying, hey, well, what do you think about this natural gas? This is seems a little getting a little out of hand. So we were kind of corresponding, and then it just got worse. There was a little bit of a breather yesterday, and I thought, oh, I might be able to manage something out of this after all. And then today happened. So we'll fast forward to that in a minute. But just to kind of recap where I was at, back in mid-August, I actually opened this position as a strangle. So on that day, I kind of really felt that natural gas was really in the center of a range that had kind of been trading in. And I knew it was kind of moving more on the bullish way is my gut feeling. But I made the strangle a little bit tilted bullish. So we can go back. I think it was trading around 380 that day, something like that. And so I set my call side kind of further out than I normally would in a strangle. And I kind of kept my bottom side put selling kind of closer to the strike. So I ended up opening a $3.40 put and then a $4.40 call. So a $1 wide. Now, I won't get into this, but basically in this world, these ticks are a whole lot more than pennies and dollars. The notional value here is quite a bit larger. So $3.40 isn't really $340 in the option world because these are futures. So this particular strangle, I brought in $17 in premium. And so I did list this $17 kind of as it was. This was $1,700 in premium from selling this. Now, it didn't take that long, but the volatility started coming down a little bit. The underlying started moving forward. So this $3.40 put started to get really cheap to buy back. So I actually bought the 340 put back and then sold the 390 call, or sorry, the 390 put, and collected another $11.40. And we'll have to look at what the exact day was, but there was a day where this thing spiked over 8% right before September, I believe it was. And the volatility, and I'll show you on that chart in a second, just went sky high and everything got really expensive. And I tried to hang into there to get a little volatility bleed off because now my put was really starting to get challenged, or sorry, my call was really starting to get challenged because this thing was up, I want to say in $4.10 range. And I was starting to get nervous. So, you know, my standard defense is as you start challenging on the call side, you hold out as long as you can to kind of bleed off that extrinsic value on your lower put side. Then you roll that up closer to the call, collecting more premium and kind of pushing your break even out a little bit. So really what's happening here is the wave is starting to thrash you and you're trying to hang on long enough to keep squeezing a little bit more premium out and hope that that wave is going to kind of recede a little bit and roll back just enough so you can kind of eke out a small profit, a scratch, something like that to defend it. And so this is textbook defense. I actually don't have any complaints about the defenses that I deployed here. So on September 2nd, I then rolled this thing from 390 to straight up to the 4.4. So now I had a put and a call right at the same strike price. So I was in a straddle. And this netted me another $22.80. So what I paused here to basically kind of recap that what I have here is a total collection of $51.20. So I collected a total of $5,120 on this trade. And all I needed was just a tiny, tiny little bit of pullback and maybe a 20% contraction in volatility. And I'll show you the chart here to make it out. But today was terrible. It jumped another 9% intraday, I think was the biggest one. And I'll show you a couple of the warning signs I was watching, and that was just time to get out. You know, my rules are normally 3 times the credit received. So it ends up being a loss that's double what I received. So my bailout price was actually around $150 some on this, such that the loss that I would have taken would have been twice the credit that I received. But unlike the soy trade, in the soy trade, I held on right to the bitter end. In this trade, there was a warning sign. I'm adhering to the warning sign saying something is different on my thesis. It's time to bail out. And so I closed this thing for $119.40 today, which basically was a substantial loss. to my portfolio, at least from all the little wins that I was kind of notching up. And so, mentally, it's really messing with my mind today. I won't let it discourage me long term, but yeah, today was a rough day. But let me just pull up the chart here real quick, and we'll get Viper's take here on some of the price action that we saw, because this was just, I don't know, all over the place. So where I entered this was around August 18th. So somewhere in here. And you can see it's kind of trending up, largely horizontal. The RSI indicator, which I typically use for kind of ranges, really showed this thing really kind of smack dab in the middle. The volatility was good. I usually like to see on a lot of the futures something above a 25% volatility. Where I entered it, it was like 40% that day on the option chain that I was entering, and so I'm like, this is great. I can come up here to $4.40 on the high side, $3.40 on the low side. That gives me an excellent net. And prior to this, the all-time high, at least for the last 52 weeks, not all-time high, was like $4.10. So I thought, man, this is a pretty easy straight shot in here. And as you can see, that the trade was going great. Volatility was bleeding down like I like. The underlying wasn't moving anywhere. It didn't quite get to my profit targets. It came kind of close. I think it got to about 40% profit before this big candle day. And I was like, man, this thing's going wonderful. It's right there in the middle. I couldn't have asked for a better setup in here. And then August 26th happened, where it jumped like 8% in one day. You can see this thing popped up to 420. And so it's already pushing up past where the previous 52-week high was. And then the following day, it popped up again. And this is where I started to try to make some of my adjustments. And honestly, when you're rolling up the put side, you want to do that on a down day because it's going to kind of juice the premium a little bit. But if you look right here, this is what killed me right here was this volatility expansion. So we went from around a 30% volatility all the way spiking up to 55% volatility. And if you look back at like the 52-week range on this, we haven't seen this high of volatility in natural gas for quite some time. So this is where I thought, okay, all right, well, I'll just kind of start hanging in here, and trying to wait it out. And that's where I rolled up into a straddle here after this other pump up again. And I was really just trying to hang on. We had this candle, which was the down day yesterday, and I thought this might have been kind of peaking. I thought this might have been the first run back down. But then the candle today, this was it time to get out, time to exit. It's where I took my loss. Now, Viper, I know you were pinging me the whole time on some of this stuff saying, hey, you had a great day yesterday. Did you at least lock in your minimized loss? And I said, nope, but it's not looking good today. And I think it was probably an hour later, this thing just took off to the moon. You can see,
Yeah.
It was rough. I think it was right around after lunchtime. Anyway, what do you got on price action on this one that you saw?
Yeah. So it's been interesting charting these futures, because first of all, I think I have the right ticker, because that's one thing that we went back and forth on, was getting the right ticker in Trading View, because there's a whole bunch of stuff. There's next contract first and all this other, like, I'm not the futures guy, and these are the reasons why I'm not the futures guy, is there's so many weird things about it. But I think I have the right ticker. So basically, yeah, let's take a look here over on my screen. Here's what I was thinking. It's also important to note that, like we try to say, it's easier said than done, but there's no such thing as regret. There's just learning opportunities. And everything is clear in hindsight. So I definitely don't want anything I'm about to say to sound like, oh, I knew it all along. Like, this is just all unfolding in real time. And and just kind of, this is how I try to break down if it's my bad play, if it's Sprocket's bad play, if it's your bad play in the Discord or something like that. Like, this is the post-mortem that I try to go through on anybody's bad play, just to find those nuggets of learning, because that's what really saves me personally when I have a bad play. It saves me from, getting really bummed out and discouraged by it. Is just, okay, you know what? It was terrible. That sucked. But I learned ABC. So let's just keep that momentum rolling forward. And as long as you position size and you don't knock yourself entirely out of the game, then you can just keep moving forward. So real quick, here's some things that I charted. Just these levels are just what your plays were roughly, very roughly. So your initial play back here, August 18th, this was your straddle, dark purple to dark purple. And so just to kind of visualize that range. And then these smaller lines are your put rolls that you did. So you rolled here, 380, 390, whatever that was, and then you rolled your put to match the call up here. So yeah, that day you referenced was this red candle right here, because somewhere around this run here, probably when you rolled your put to match, that's when I started looking at this, and I was like, this doesn't look great. I mean, you got some strong bull candles, then you got higher lows, and now we're going and making higher highs. This is a solid bull trend, and I actually haven't done this, so let me look. Heikin Ashi. Heikin Ashi says, "Why are you trying to short this?" So that's an interesting perspective.
Maybe it's wrong.
That's the first time I've done that, and boy, that does hurt a little bit. So anyways, this is a strong bull trend. So that day you were talking about was this red candle right here. We were coming up on this 480-ish. That was the level that was make or break as far as what we identified on the chart. And sure enough, it rejected that briefly. And so we got this big down day. So that was when I was like, hey, you locked in something, right? Because yes, the next day, to really get the retrace, the next day also now needs to continue the downtrend, but tomorrow's never promised. And so this is where, and I don't know what reducing position size even looks like. If this is all one contract, that's not really a thing. You close out, but whatever. But that's where I was like, when you start to get deep, this is me personally, because obviously, Sprocket has his thing about where his bailout is. And, if you stick to everything, you can at least be repeatable. But for me personally, if I start to get super deep, I'm going to try. It's emotionally challenging. I'm going to try to look for these little wins back where you're not breaking even, you're not even getting near positive, but you're getting this breather. And in a strong bull trend, all of these breathers, these are going to appear in any bull trend. There's going to be these breathers. And so I would have locked in something there, and then it just brought the hammer and slammed that down. So going back, what I'm taking in my own postmortem of this is trying to frame this in the context of price action and whatnot. So if we all of a sudden blow back here, to me, and this is stressing the limits of my understanding of price action. So if I'm incorrectly interpreting this from anybody who knows price action, absolutely, let us know, because I need to, this is a learning experience. But when I zoom back, what I want to look for is a previous swing that set the high. And what I'm struggling with is how far do you go for a high? It doesn't, technically the swing that started the all-time high, maybe that's where you go back to, excuse me. But at least initially I'll zoom back and I see this swing back here in October of 2018. We have a swing that, let's clear out these other levels that I put on here. And now let's look through the lens of price action. So if we go back, this swing that made this high started objectively somewhere around here. So in the world of price action, like this purple line, that's the swing line because that's the swing that took us all the way up here to 490. And then that's the line that we need to see tested for support or resistance. So we can see it comes down, it gives it a little test, potentially gets its support, but then it falters and falls down, comes up. This is a rejection. This is a rejection. And it actually falls way down here to $1.30. We come back up, we test it again, we get rejected. We come back up, we actually take the level. We come back down, and I won't zoom in or whatnot, but you know, we see multiple tests here. We see some chitter chatter, and it seems to be holding. And now we launch a new swing from this level. So now, in hindsight and looking at this previous swing, now every play that I would make on this position is going to be based on this original swing level now testing positive for support. And I don't expect it to slow down until this previous high, until we can actually get up there and test that. I mean, there's, you know, as you chart your levels and stuff, there's stuff along the way that's worth noting, because all these other levels that didn't hold as on our way back down or on our way up, you know, it's going to react at those levels. There might even be a couple little tests. So, you know, it's not a blind, like, oh, 250 and I'm in it till 480. Like, that's not a good idea. But, you know, you can see that, if we go ahead and throw down this guy here, which was a resistance level, it gets flipped, and you can see how strongly the underlying reacted, where it just kind of really churned here for a little bit. And this is the moment of entry for Sprocket there. And that, you know, in hindsight, doesn't, like, that looks like an entry that I would take a naked put on, but it's so mid swing that, you know, going call on it. Well, we see how that ends.
Yeah, I mean, I totally get that. Actually, one thing that I kind of struggle with when we look at the charts and the levels and stuff like that is where that level gets set. Excuse me, where that level gets set. Like, I totally get that as the upper end of that swing pattern. The real question when you're starting to trade options here is the time frame that you're going to go for it, right? Because it could take a year to get back up to that level, and the whole time you might as well burn some premium. And so that's really where I was at. And if you look at the size of those candles that caused the expeditious jump there, I mean, within a week there was 2 candles that were like 9% moves, which is huge for that.
Yeah, that's a really good point, because keep in mind, on premium selling, time is kind of, or can potentially always, not always, but it can potentially be on your side. So yeah, you know, on this swing from way low to way high, somewhere in the middle, yeah, I guess in that case, you know, a call or a put can have major value if you go sideways for a little bit. And if you go sideways for a little bit, you're still in a bull run, you're still in a bull pattern to complete that swing. So yeah, that is a good and important point as to how to wrap your head around that to make those better decisions.
Yeah. And just for funsy a little bit, you know, you said, hey, you should buy it, you know, $1.80 and hold till what did you say, like 480 or something like that?
Yeah.
Just in the world of futures, just this particular one, because everything is different, 0.001. Okay. So 1,000th of a tick is $10. So you can do the math there. That's a lot of dollars in movement.
And actually, let me jump to my chart real quick just to give you a little bit of validation, I guess, because I don't like how it sounds like, oh, you made a bad play. Um, so now looking, so even if we had brought in the context of Heikin Ashi, so this is now the Heikin Ashi candles. August 18th is when you got in. So here we see that we're in a downtrend. And then August 27th was when you did your first roll. So I mean, it did show strong uptrend, but my point was, if we look at this area here, in everything we just said about context and options and time and trying to burn that time in the world of Heikin Ashi, this looks pretty attractive. I mean, you have a downtrend, you have an uptrend, but none of it's really all that strong. And that's exactly what you want. No matter the overall uptrend, you just want to go sideways, burn the theta, get some of that back. So this is where your validation could potentially come in, that it was worth entering. It was this tearaway that I don't know that possible. Some things aren't predictable, and it's just the nature of the game, and it's why we talk so much about position sizing and risk tolerance and all that good stuff.
Yeah, no, definitely. And that's really where my focus and my reflection here is why did this hurt so bad? Because honestly, unlike the soy trade, I have no regrets about when I made management decisions and why I made them. So the difference here that I'm going to kind of go back to is that when we called that down day and you said, look, the following day, we're looking for a continuation of that down day for that confirmation, basically yesterday's continuation. That was a gamble that I was taking because I wasn't hitting my bailout price yet. So I had the ability, my strategy says, wait out a little bit to see if you get that down day. If it starts to go up, now it's time to get out. And that was the warning sign. Now, unfortunately, that rejection there was ginormous today. So it hurt a little bit more, but that was the warning sign that I was adhering to this time, unlike soy that broke a couple levels on the way down and I ignored it and just held fast to that tried and true, this is where I'm getting out. I didn't do those warning signs and say, has my thesis changed? Which is what I did here. And I would argue, I saved myself $5,000 by not riding that thing any further. Watch, tomorrow it's going to crash down and I've probably been fine. But
I mean, I was going to say, stick to the rule of never look back. It is starting down, but I would expect it to go down after that big pump. Like, it's going to drop down again, and it's in such a strong uptrend. It wouldn't surprise me to get a nice thick down candle, but not down enough, and then another not massive jump, but another uptrend continuance.
So let me show you something here, because then you'll be like, dude, you'd be crazy, man. Remember in that chart there, I was telling you that this volatility is just awesome up here. Well, I couldn't really help myself a few days ago when this thing was pumping up in the 50%. So I didn't really tell you this yet, although I think I might have mentioned it in the Discord. I opened another strangle. So I'm currently in there with a 5.7 call out there. Now, this is
oh boy.
We can talk about some other interesting things on how I did this, because I actually have two calls here. I'm actually short the 4.2 call and short the 5.7 call. The difference is I went ahead and also bought a future as well. So I actually own, two futures. I'm short two calls at 420 and I'm short two calls at 570. So I get this nice strangle looking pattern that I collected about $6,500 in premium on.
Glutton for punishment.
Yeah. So I guess we'll see. I mean, the thinking here is, all right, this thing's on a bull tear, sure. but how long is it going to be on a bull tear? And is it going to
Yeah.
push all the way up to 570 before the end of October?
Well, I mean, yeah, and the charts. I mean, this does look more palatable. Um, is it really going to hit 570?
Yeah. So the one thing that difference here a little bit is I'm really playing volatility contraction on this one. So, going back to the chart, this big pump up in volatility to the over 50%, right? When I entered the previous play, we were around 30, 40% volatility. And so what I'm really also banking on is the volatility contraction here. So it jumped up in volatility when the price jumped up. So even if it basically, for that volatility to kind of stay super elevated, I think this has to continue on just a tear of a bull run, like huge strong. And if you just look at the candles on how this thing climbs and rises and falls, um, I'm really looking for the volatility contraction. So
Yeah, and I think that's a lot more likely because it's not going to tear through the previous high, which it's sitting at right now, 490. It even if it's going to take it, it's going to stall out. It's going to challenge it. It's going to test it, and that's exactly what's going to bring that volatility down and give you that option to get out.
Yep. So that's where I'm at. Maybe we'll look back on this in a couple weeks and be like, haha, we're now at $8. What's wrong with you, man? But
3.0.
or maybe we'll be down at, like $3 on natural gas. I doubt it, but who knows? Well, that brings us to the end of this week's episode. Hope you enjoyed learning from some of our mistakes like natural gas, and hope you maybe picked up something on some of the price action and some of the day trading techniques that Viper's been kind of getting into. As always, hop in the Discord, leave us a note. What do you like to see? What don't you like to see? Let us know what you're trading. Let us know what you're watching. Good luck this week. Look forward to how some of these things play out and a little bit more introspective coming up. And remember, Wednesdays, about 8:30 p.m. Eastern time, you can now catch us live as we record this in the Discord. And we'll look forward to seeing you guys in the future. Good luck this week. And remember, think outside the block.